we're really lucky to have Shiloh here. She is the founder of a company called ComplYant, and I hope she shares more about it because I know from what I've seen, it looks really awesome, but it's really meant to help us as business owners stay on top of our taxes and all the deadlines that come with it, and really built for us. And so she's a founder of a company. She's a CPA. She's very knowledgeable, and she's raised $10 million for her app and her business, and is going to South by Southwest to raise even more. So very excited for you. And I'm going to spotlight you as well, so everyone can look at you while you're sharing. But thank you so much for joining. Feel free to add more to your intro and then dive right in.
Absolutely. So a little bit more, and this is probably lesson number one: never take advice from anyone about anything that isn't smarter in that area than you. Let me just start there. The amount of people that say they have accounting or bookkeeping or tax knowledge, and they don't know much more than you, is a red flag number one, especially when there's so much on the line when it comes to being accurate with your accounting and your tax, especially now as a new business owner or a business owner, whether you've been around for a long time or not. Hiring appropriately is incredibly important, and we'll touch on that a little bit later. So more about me. I actually am California born, LA baby, Cal State Dominguez Hills, graduated in accounting. I have a master's in taxation from Golden Gate University up in San Francisco. I also was a young mom, so I had my first child when I was 17. So I understand the balance of building along with raising children. I did most of that by myself. So when I tell you I know the hustle, I know the hustle. You are going to get a masterclass in not just tax and accounting, but just how to stay focused in building when it's hard, building when you don't see the money you want to see, building when you're confused, building when you're lost. I want you to know I've been there with you. I understand. And keep going. The next thing that's worth mentioning, I am a CPA. It's not, my licensure is not active. I want to color that in. It's not active because I don't maintain it. I build ComplYant and I don't focus on practicing CPA. I don't have a practice anymore. But I do have the education, the information, and the licensure. It's just inactive. So I wanted to make sure that I color that in. Another thing I want to color in is, while I will do my absolute best to answer your questions as generally as possible, I won't be able to give you hyper-specific advice that you can go and like file and use, because a part of my licensure is making sure that I cover myself and also you. So I will answer your questions as best as I can, but if we cover an area that sounds like advisement, I may refer you to another resource that you could look into. She mentioned ComplYant. I have been running that company since 2019. It is tax software for small business owners to help you all manage all of the stuff that has to do with understanding tax compliance, and not just income tax, but sales tax, business licenses, annual personal property tax, annual reports, all of those things that you need to stay compliant with your business registrations and qualifications. We manage and we help you manage. And she is right. I did raise some money, 12.8 million to be exact. I have about 50-ish employees, so I can answer some questions there if you have any, but we'll try to keep this conversation centered around accounting and tax. I did not give you any slides to prepare any because I don't think that we should do that. This shouldn't be a class. This should be probably more of a conversation. And because there aren't a whole lot of you, I can actually make this conversation a lot more curated. So we can go through specifics around what you actually do and how that relates to making sure that you're covering all your bases. And in that, I will also try to answer some of your questions, and there'll be time for any additional questions you may have. And that will be what we do. Can I ask a question? Can you give me like a flag when we're like 5 to 10 minutes from being at time?
Absolutely. Yes.
Great. Because I talk a lot and I will continue talking. And then you'll be like, oh, it ended like an hour ago. Yeah, that's how I work. Okay, great. So starting with probably some general overview information. I mentioned this a second ago. So tax, technically for small businesses, there are 10 types of business tax. Most people think there's only one. Most people think the only thing I have to worry about is income tax, and TurboTax will do that for me and I'm good to go. That's actually not true. In fact, the other types of tax are audited more heavily and also can be the difference maker in whether or not you get business funding. So for example, I have a partnership with the city of Los Angeles, and we did this partnership because when we were in COVID and they were giving away grant money, they turned away basically 60% of the applicants because those applicants didn't have business licenses. It's a main core function of running a business in the city, no matter what kind of business, whether you're side hustling, whether you just, don't sell very much. If your expectation is to take advantage of any government programs, funding, grants, loans, any of it, the first thing they're going to ask you for is, are you compliant with our city requirements? And our city requirement is a business license. And that goes for wherever you are, whether you're in, I don't even know. Is everyone in California? Where are you
For
all?
the most part, I would say mostly LA, Orange County.
LA.
I don't think anyone's out of state. So yeah.
Perfect. So that even more so. California has some of the strictest tax rules, which I mean, obviously makes sense. California is a highly desired place to live. And so as a result, the state takes advantage of the opportunity to leverage that tax income. So they tax a lot and they audit regularly. One of those 10 types of tax, I'll go through some of them. So you think about like income tax at the federal and the state level. There's also what's called an annual report. So in the state of California, you have to continue to tell the Secretary of State's office that you're a business. You have to tell them, hi, I made a business. This is where this business is. I'm going to pay $25 every 2 years to tell you where this business is. And the state says, great, thank you. See you in 2 years. And that is a tax. It is an obligation. If you don't pay that $25, they fine you $250. And they keep finding you and adding penalties every single year you don't pay. That's how the tax system works. It's designed for you to just sort of do the right thing according to the jurisdiction that they'd like you to do. So back to the 10 types of tax. So we have federal income, state income, we have annual reports, we have sales tax, we have business personal property tax. There's also payroll tax. There's also business licensing, as I mentioned. There's also gross receipt tax. There's also telecom tax, but none of you have to worry about that. And then there are other sort of industry-based taxes that you may not have to, like permits and licensing related to, like usually like if you're in the cannabis industry, there tends to be cannabis permits and licensing you have to maintain. So there's lots of like industry-based permits that you have to think through. Cigarettes, alcohol, all of that is industry permits. So you see how it can become a lot very fast. And you're just like, I don't even know if I'm doing any of this right. There's two things that you cannot sleep on. Don't try to finesse your way around it. One of those things is income tax that I mentioned. And then the other one of those things is your business license that I mentioned. And you would think that like, it's just a business license. But again, it excludes you from grant and opportunities. Let's say a few of you, I heard everyone generally in event space. Let's say the city of Manhattan Beach is having a massive event and they hire you to come in and do all of the event decorations. They're going to pay you $5,000. It's going to be a huge job. And the one requirement that you have to have by the end of the day is a copy of your Manhattan Beach business license or your City of LA business license or whatever. You're like, what? I don't have a license. What is that? I'm panicking. That's why it's important to stay compliant, because it will rule you out of things. Any bids that come from the state, you have to be regulated and compliant. Anything where there is money that you could potentially get, you want to make sure that you're covered there. Let's start with income tax. I'm glad you all are in California, because California has a really weird state income tax rule that I'm sure you guys have heard. Have you guys heard that $800 thing where they're like, oh, you have to pay $800 to the state? Have you all heard that?
Like the LLC fee? Yeah.
Yeah. So a few misconceptions. It's not a fee. It's a minimum tax. That's a big misconception. People think like, oh, that's $800 fee. It's not a fee. So let's say you have a really good year. I mean, you make $2 million and everything has gone well. You hired a CPA, you did all of these things, and your state income tax bill is $5,000. You're not paying $800. You're paying $5,000. It is the lesser of the two. Either you're paying your state income tax and whatever bill that is, or you're paying $800. At minimum, they're going to collect $800 from every business. Well, every registered business. So I just want for people to understand that. So if you get beyond the $800 and you're like, I don't have to pay that fee anymore. No, you do. You're paying it. You're just paying the actual tax that's more than that. Keep in mind, while some states are like, well, you don't have to pay anything in Nevada or whatever, other states don't have that obligation. The state of California considers it a privilege to do business here. Any state license fee tax is the privilege to conduct business or sell to the people that live in the area. That's what you're paying to the state of California, is the privilege to sell to the people that live here. And because California is one of the wealthier states, because there are lots of people here, there tends to be a greater benefit of you doing well here. And so the way the state collects on that and keeps you accountable to them is by requiring that minimum tax. And let me just tell you, if business doesn't go well and you don't want to continue running it, you have to make sure to close it down. You have to contact the Franchise Tax Board and tell the Secretary of State, I am no longer operating my business. We're closing it. Do it immediately. As soon as you decide you don't want to run the business anymore, please, please, please. If you have any past businesses you've had open and you didn't close, please close them, because the state will continue to charge you. Every single year, they will expect a tax return until you tell them you are no longer a business. So the second you tell them you're a business, you get to start up and move forward. But when you're done operating business, you have to tell them you're not going to operate, because they don't know until you tell them. And they will back charge you every year. They keep it open. And I have seen the travesty of that. I'm going to pause here. Does anybody have any questions?
I have a question while folks are still thinking. So you mentioned the income tax fee of $800. So is that, but is that only if you have like a entity, like an LLC, or what if
a registered business? Yep.
Registered business.
Yep.
Okay.
It's LLC.
Some folks are
corporation.
like doing business, but they don't have an entity. Is that
Let's
okay,
talk about that.
Okay. Yeah.
Yes, that's a great question.
Okay.
I call those folks side hustlers, and I adore the side hustler. I will get to you in 1 second, Andrea. I call the side hustlers just magical people who are thinking about how to create wealth, about how to maximize their creative gifts. I want to encourage you all to keep doing it, keep going. Don't ever stop. Side hustling is really great. But there comes a point in the side hustle journey where you have to decide if you're going to become a business. While I do think that it's important to, figure things out. Maybe you're like, I don't really know what I'm doing, not sure if I can make any sales yet. I'm just kind of navigating. And while you're in that, I'm just kind of navigating, you do have a business. It's just not registered. The second you decide to sell something and then collect money, even if it's 50 cents, you are now a business owner. The difference is you're just not registered. You're not registered. We haven't told anybody you're a business owner. But every dollar you collect, you are a sole proprietor. You're now collecting that money for your business, and you're supposed to report that money to the government. Whether or not you choose to, up to you. I'm not here to scold anyone, but I want to make sure that that's clear. Even if you're operating as a side hustle, you're still a business. You're just an unregistered business. Now, here are the benefits of registering your business. There are basically 4 main entity types. There's a sole proprietorship, there's your partnership, there's your limited liability company, and then there's your corporation. Each of these are types of business. When you side hustle, you're a sole proprietor. And the reason why sole proprietorship is probably the most common and popular, because it's easy to do. You don't have to do anything. You don't even have to tell the city. You don't have to get a business license. You don't have to do anything. You should get a business license. You should tell the state that you're at least operating and get a separate tax ID number, but you don't technically have to. You could sell on Shopify and no one ever knows that you're a business. You could sell as your name. But here's the problem with that. It leaves you exposed to liability, to legal liability and tax liability. When you're a sole proprietor, all the responsibility of the company's legal issues are on you, the person, and all of the tax responsibilities are on you, the person. Which is why when you file your taxes as a sole proprietor, you file a Schedule C, which is how you report business income and business deductions. And it's all on you. So if you end up owing a lot of money, the IRS can actually come after your personal bank accounts. They can come after and put a lien on your home and anything else that you personally own. There's no protection when you're a sole proprietor. It's easy, but there's no protection. So the second level partnership is the same thing as a sole proprietor. You're just doing it with another person. It's 2 sole proprietors coming together. And you're sharing the responsibility personally of the business. So you are leaving yourself exposed along with the person you're choosing to partner with. You're both basically on the hook for any tax and legal responsibilities if something should happen with the business. When you're an LLC, that's where you start to get some personal protection. And then you register this LLC with the state. And now you have other obligations like the $800 minimum tax. So there's plus and minuses to both, but the benefit of being protected as an LLC means you have very limited liability, meaning if there's a legal issue or a tax issue, you have a small layer of protection from the government actually coming and like seizing your property if you don't comply with whatever. Or maybe you let a back tax bill go on too long or something like that for the business. They can't come after things that you own if you're properly registered. The other benefit of being an LLC, and something that people don't talk about a lot, is so it's limited liability. It's not full coverage. Corporations are the only entity that 100% protects you. A corporation acts like its own thing. It's like its own person. And you are the separate person that works for the corporation as the CEO. That's the difference. Limited liability, there's some protection, but not as much as a corporation. A corporation is the most protection. I'm going to pause there. Somebody had a question.
I have a question.
Yeah.
So do you have to pay the $800 if you're a sole proprietor? If you
No.
have like negative
No,
liability?
because the only entity types that are required to register with the state are LLCs and corporations.
Okay.
When you're a sole proprietor, you're not registering with the Secretary of State. You're not required to.
All right. Thank you.
Mm-hmm.
And I think Yadira had a question as well.
Yep.
Okay. So my question is, back in like 2018 or 2019, I opened up a boutique. I only opened up for a seller's permit, but I never closed it. I just assumed like, oh, I'm not reporting anything, so it'll close. But now I'm like, oh my gosh, how do I close it? Do I have to call?
So you said seller's permit. I assume you mean you registered with for the sales tax department. It's called the CDTFA, which is like the California Department of Tax and Fees. It's how we manage sales tax.
Yes.
So what you'll have to do is actually call this division and let them know the date that you stopped business. And let them know that I haven't been operating since X date. And is there a way we can backdate my closure? They're probably going to say no. But maybe they won't, and you'll get someone nice and they'll let you backdate it. If they do not, what they're going to ask you to do is file $0 tax returns for all the years that are missing, and then they will let you close it.
Okay.
So that's the thing about every tax. I know it's the worst, but the good news is you can do this online. Like if they tell you, well, we're not going to backdate the closure, you need to file. You can go online onto their actual account. If you don't already have one, you should create one, and then it'll show all of the tax returns you have due, and you can just click in them, hit 0, 0, 0, 0 all the way down the line. Submit, click 0, 0, 0, 0. You can do it for each year. It's kind of manual, but you don't really need to pay someone to do that for you. It's really easy. But the first step would be call the state and ask if they will backdate your closure. Just say, I don't know, I had a lapse in judgment. My mom was sick. I don't know. Say something that sounds good. COVID had me. I couldn't figure it out. Can you please backdate closing my account? I haven't operated business. I haven't made any sales. And then maybe you get someone nice and they'll do it for you.
Okay. All right.
Yeah.
Thank you.
Yeah. Once they do it, get them to send you confirmation that it's been closed. That's important in the event that the state comes back and says, well, we want to audit you. And you're like, well, I closed it. The person on the phone did it for me. And then they'll say, well, who'd you speak to? What confirmation do you have? So this is a really great tip across the board and for everyone. Anytime you communicate with any tax authority, get whoever you're talking to their name and whatever their badge number is or their ID number or whatever they're going to tell you when hi, this is so-and-so, badge number 1, 2, 3, 4, 5, write that down. Because if you ever have to go back and reference that conversation or whoever you spoke to, that's your evidence that you spoke to someone real and you're not making it up, and they can go back and trace with that person. The other thing there too is if you ever send any correspondence to any tax authority, the IRS, the state, anybody, always send it certified mail. So you have proof that it was sent and someone signed for it. That's anything you send to the IRS. I don't even care if it's a change of address. Anything you send, you need to send it certified with a little green slip at the post office, because that's almost, in most cases, your only protection. That's a sidebar, but I just wanted to mention that. Any other questions?
I know you're probably going to get into this, but when you were talking about the benefits of LLC and sole proprietorship, and obviously the protection is one thing. Do both entities qualify for the same deductions, or is there different deductions based on your entity? Okay.
Oh, that's a really great question. Generally, yes. Every entity type has the same deduction availability. What makes it different is a few different things: how much money the business is making, if you have employees or not, where you are in the world or country or city. Those things vary on what sort of are like credits you can take or something like that. But deductions exist for every business across the board, and they're generally very blanketed. They're the same for all businesses, whether you're a sole proprietor or a corp or whatever. In fact, on the Schedule C, which is the form that goes along with your 1040, where you report your business income, it lists them out. It has like meals and uniforms and sort of a few general terms that apply to every single business, no matter what. Here's something else I want to talk about. Great point to like shift into deductions, because that's a huge one. A lot of business owners actually don't think they can take a lot of deductions. They're also, I tend to see business owners very apprehensive about taking deductions. You all should know tax code and the entire deduction process is written to support small business. The government wants you to take as many of them as you possibly can that apply. What they want you to do is be clear, and then they don't want you to lie, but they want you to take them. That's why they're there, right? So meals and transportation, gas. If you all are driving, I know some of you are in party planning. If you all are driving to a gig and you drove your own car, you should be taking the mileage that it took you to get there. You should be taking the gas. If you bought yourself a coffee on the way to stay awake, that coffee is tax deductible. If you bought yourself an air pump because your old one broke down, that air pump should be tax deductible. If you rent an air pump, that rental fee is tax deductible. The gas you use to drive to go get the air pump is tax deductible. So you should be thinking about everything related to your business that way. And the way that you track that is by having some kind of bookkeeping system where you just basically categorize how you spend money for the business. What of this purchase is supplies? What of this purchase is gas? Which one is for food? Which one is for whatever? So I wanted to just pause there. Take as many deductions as you possibly can. Don't shy away from them. I know there's a question in here about organizing receipts. Because of the way that technology has evolved, the IRS cares less about receipts if it's not for cash. So if you're purchasing things on a company credit card, then you should be fine, because all credit card reporting goes to the IRS. So you don't need to keep receipts. They will take a statement. But if you pay for things cash, you definitely need to get a receipt. Always, rule of thumb, if I gave them cash, give me a receipt, because it's hard to defend what you purchased with cash when you have no paper trail. When you bought it with a card, you can pull a statement. When you bought it with cash, there's no statement to pull. So always collect receipts. The best way I've seen that organized in every single app that ever exists that has anything to do with finance has some kind of scanning feature, especially in bookkeeping apps. There are receipt scanning features. Downloading a receipt scanner and making a folder that says receipts for the business, you don't even have to do anything beyond that. And scanning your receipts with your phone and then just dumping them all in that folder, and you can worry about it later. I've seen that work really well for people, and I would recommend doing something like that. Pausing for questions.
You reminded me of when my boys were playing sports or whatnot, like there's the gal who was collecting funds or whatever. She always had like her little receipt book, and she's really organized and making sure like, no, I need to give you a receipt. And so even, to that extent, because we do deal in cash quite a bit, it's just obviously not as much as before, but it just happens, and it can really be easy to lose track of what that is. So
absolutely, especially when you get talking about like auditing or having to prove things. If you don't have any, and it can be as simple as literally buying a receipt book from, Smart and Final or whatever, and just handwriting, paid $50 for new balloons or something. And just keeping that for as your own log if someone doesn't give you a receipt. If they're like, oh, we don't do receipts. Okay, then make one for yourself and just throw it in there. Like, person didn't provide receipt. You just need some way to defend, especially if it's a large purchase. So I tell past clients, anything over $100, there better be some paper somewhere. Because that's, other thing, less than 100 is a little bit immaterial. So if you pay, $5 for gum, no one's like hunting down the receipt for that. But if you need to prove out, $1,000 for some repair on, your work truck or something, that's a hard one to swing when you don't have a receipt. So just start getting in the habit of that.
I have another question based on the deduction side as we kind of go in, but a lot of our folks here are also content creators by nature, because that's just how everyone, does business and everything else. So there's a lot of things that get purchased and, going towards that. And so just how, like, if you've worked with creatives and things, like, how creative can we be when it comes to all of these things that get purchased for content? And is anyone missing anything obvious that sometimes doesn't get deducted that you've seen?
I'm going to answer that, but I wanted to someone else piped in and had another question. I thought I heard.
Oh, it was me. It's similar to the question that Patty's asking. So we have a lot of expenses right now because for art supplies and mailings and mailing envelopes and just mainly art supplies. But we're not making a whole lot of money. So at what point do we claim all these expenses? Because right now we're in a hole. and just not sure how to do that, how to go about that.
So you bring up a really great point, and similar to what Patty asked. So I'm going to cover this a little bit in two ways. So we are doing, I'm going to just pipe in a link to, we're hosting a free webinar on the 22nd of March for freelancers and digital creatives, centered entirely around tax. And it's led by another CPA on our team named Ro Williams. She's also a tax attorney and she's brilliant. And so I'm going to drop that in as a resource for you all, just so you can have that. If you're available, you should attend. The way that we should think about operating at a loss, I'm so glad you asked that question. So there are two parts to this. The first part is separating business from personal. Okay, so even though you're a sole proprietor, even though you're side hustling, you should still at very least have a separate bank account. You technically should go and get a DBA, which you can get with the city, which allows you to get a bank account in the business's name. If you don't want to go that far, you're like, I just want to side hustle, I don't want to do the official DBA thing, it's up to you. But separating that spending is paramount, like absolutely 100%. Because what happens is, let's say you get audited and you tell the IRS, well, that actually wasn't in you give them your personal bank account and you're saying, here's all the spending I did for my business, but you've got business and personal spending mushed together. The IRS will say, no, that's not a business, that's personal, and you need to pay us. And you're saying, no, this is business. And they're saying, no, because you didn't separate the spending, we can't tell that it is any different than just your regular job, your 9 to 5. And the reason that hurts is because as a business, you get to take all these deductions. As a person, you do not. There are no deductions on a 1040. You're just itemizing. That's it. It's itemized or standard. That same experience where you're deducting food and gas and mileage, you don't get that as an individual person filing your income tax, like a W-2 earner. So separate the spending. That's advice number one. Go and get a business bank account, which you can do if you're going to remain sole proprietor. You can do that by getting a DBA. You get a, which is just short form for doing business as. So it's saying, hey, city, I'm going to start doing business as such and such designs, and I want a bank account. And the bank is going to say, you need to bring us your DBA, and you need to bring us ID, and you need to do. Go and get that thing, and then open that separate account, even though you're operating at a loss. And here's what you do: you transfer your personal money that you're spending into that business account, and you call it a loan or an investment into the business. This protects you in the event that you need to pay back that loan and give yourself the money back. And let's say the business has a really good year next year, and you're like, I put $50,000 into this business. I want my money back. So now the business can pay you back. It can repay the loan with interest. You can use it as an investment, sell the business, and now the investors owe you for this initial investment. But never just spend out of your personal account on the business, because there's no protection for you. There's no get back. And you have no proof that you spent this money. So always think and operate in the way that, what if my business becomes successful? Always be thinking that. If you're only thinking, well, we're not doing it, it's just a loss right now, it's not a big deal. It is a big deal, because you can go from operating at a loss to operating in success very quickly, in weeks. And to be scrambling thinking, oh no, now I have to get it together and I've got 500 orders and I don't know how to get them all out. Plus I need to go and get a business bank account. Plus I need to go and figure all this stuff out. Do it now while you don't have a lot of sales going on and it's not as busy, and you can set things up properly. It sounds like extra steps that you're like, well, I don't really need to do this. We're not making any money, but you will. You will. And more importantly, you want to be able to claim the losses. Here's how claiming the losses works. We're going to get a little bit into tax speak, and I'm so sorry, but it's important to understand. So let's say this year you overall took a loss of $5,000, meaning you spent $5,000 and the company made zero money. What happens is you tell the IRS, they say, great, thanks. And that loss gets to roll forward, which means next year, when you're doing really good, you can say, hey, IRS, last year I took a loss. Give me some credit for that this year. And they say, okay, you got it. That's how it works. You don't get to take that credit if you don't report that you took the loss. You can't prove that you took the loss if you don't separate your spending from business to personal. You see how that works?
Okay, thank you.
Did that answer your question?
Yes.
Yeah. Yeah. So keep spending, do what you got to do to invest in your business. Just separate it out so that you can take the benefit of it once you start making money. Any additional questions?
Note on that, like we have
Yeah.
a credit union, which
Mhm.
is great well, it's great because we can create a business account that is free, essentially. That's
Yep.
a big, what they try to do is encourage you to do that. So it's great and it's free and it's connected. It's challenging because it's limited in terms of some of the, things
Offerings.
a bigger
Yeah.
bank can do, but
Yeah.
that free part is great because sometimes you don't, you want to have, let's say you created one account that's, for all of the money that's coming in, and then another
Yep.
one where you're wanting to save money to put aside for taxes or things like
Yep.
that, if you want to get a little more creative. But
Yeah.
it's been helpful to have something like a credit union for our business account.
Yeah. I also think credit unions are excellent lending vehicles when you're very small, because they tend to base their lending on relationship, whereas big banks base it on the success of the business. So that leads me to a really great point, is building a relationship with a bank. One preferably local to where you are, where they can physically see you. Like go into a bank, order checks, go into the bank and make a deposit. The more that they get to see you and you get to know the bank, specifically the bankers, not the tellers. The bankers are the ones that make decisions about lending. When you're running a business, you need options for lending as the business grows. You will get in this space where you make money, but not fast enough to put orders out. And so you're going to need a line of credit or a loan or access to a credit card. Credit unions are really good at getting you that access when you have a relationship, especially in the sense that they want to make relationship with you. So let's say every other Friday, you go into the credit union and, you chat up one of the reps, say, how you doing? Good to see you. Oh, how's business? Business is good. I, did 10 orders last week. The more they start to see you, the more that they feel comfortable wanting to lend to you. So when you come back in and you say, hey, I had a really big deal, I need to fund it, can you help me? You're not a stranger to them. Now they're going to bend over backwards to make sure that they can get you what you need. So building banking relationships is very important for small business.
So getting back to my question about running on a
Of
negative.
course. Yeah.
So because we didn't establish a separate bank account and we don't have a DBA or a license, does that mean that everything we invested in for 2022 is a wash?
Not necessarily. If you do one thing, you're going to have to sort of do some bookkeeping. So if you don't already have a bookkeeping platform that you like, Xero or Wave or QuickBooks or any of those, I would recommend getting one. And then I would recommend downloading your banking transactions for whatever bank account you used, and then going in and sorting in that software what is personal and what is business. And then stop using that account and start spending out of the new account.
Okay.
The best bet I can tell you, I still don't know if they'll accept it, but at least you start to present more like a business. And then I would encourage you to start today and go and get a business bank account so that the IRS can see the behavior of, I'm not trying to operate as a person. I was trying to operate as a business. I just wasn't aware. So you'll want to start now, move forward, and then try to do some, like, still download the transactions that come from the personal account, but you'll have to separate them. You'll have to tell the bookkeeping software that you use that this is a personal purchase and this is a business purchase.
Okay.
Yeah, that's always a tricky one that I see a lot of businesses get in trouble with, because they, are like, well, I just kind of bought this stuff out of my own account. Yeah, good. However, if you want to deduct it, you're going to have to figure out a way to legitimize the business as a business in order to do that.
Okay.
Yeah. Anything else? Any other questions before we move on? There's a question in here about paying. It says, how do I pay myself through my LLC? This is a really good question, no matter what entity you run. Paying yourself is a gentle situation when you're the business owner. The IRS does not love when you just take money out of your business and go buy something. They want you to technically pay yourself a payroll wage. And they want you to do this so that they can collect payroll tax. And they cannot replace the Medicare and Social Security if you just take cash out of your account and go buy a new purse. You can take bonuses for yourself. They just don't want 100% of your income to be based on a bonus structure. They don't want you to, if you're like, I'm going to pay myself 50 grand this year, and then you go and withdraw 50 grand from the company, and then you go put it in your personal account. They don't want you to do that. They want you to maybe withdraw 10 grand out of your personal account and put that in there and call it a bonus. And the rest, they want you to send through a payroll company, like literally Gusto, assign myself a payroll. It sounds weird because you're like, why would I assign myself a payroll? It's so that the government can collect payroll tax. If you don't do that, they lose out on that, especially state and federal, and they don't prefer it. And the likelihood that they will audit you is much higher. They're very strict about that. So they don't like personal draws.
Even
they
if
want you to
you're
have
like
some balance.
Oh, sorry. If you're a sole proprietor, like a single person, you would still use like a tool like Gusto to establish a payroll. And then does that have to be on a regular? So in other words, like if, let's say your business is ebbs and flows, it's not always consistent.
Steady.
Yeah. So then paying yourself can be tricky because it's based on that. So are you able to modify what you pay yourself based on that? Or does it have to be like this certain amount every 2 weeks or whatnot?
No, you can modify it. So even if you're like, well, I'll do a payroll once a quarter, as long as you're running it through payroll software or actually filing it as traditional payroll tax into some balance of degree, then that's fine. But let's say you hit a really high inflection point around Christmas and you've made a ton of money and you're thinking, I can take some of this money. You absolutely can. You could, let's say you made 10,000, you could transfer half of that into your personal account and move on with your life. But you just don't want to do that every single time you make money. You want to start to put yourself in some kind of cadence and say, okay, for the last quarter, I've made $50,000. I want to take half of it. I need to run a quarterly payroll for myself for $25,000 so that I can submit tax responsibly to the federal and state government. It can't be, even if you're sole proprietor. If you're sole proprietor, corp, LLC, partnership, doesn't matter. You shouldn't be paying yourself 100% as in, I'm just going to transfer the money to myself because the government loses and they don't like it. Yes, payroll software I recommend. The lowest priced and seems to be the most efficient for a party of ones or less than 5 is a product called Gusto, Gusto. I think it's like $40 a month or something. It's not very expensive at all. And it's designed for businesses like y'all's, where it's a little bit smaller and you need to quickly do something. They tend to have a lot more flexibility there. Another software, QuickBooks actually has payroll software. If you're already using QuickBooks, you can utilize their payroll software. It's pretty simple, not as inexpensive, but it's pretty simple and pretty accurate. As you grow and sort of build out, there's other software PEOs like Rippling. There's, TriNet, there's all kinds, ADP, there's all kinds of stuff that you could choose. But in the early days, Gusto and JustWorks tend to be pretty popular. There's a question that says, I've been paying myself a percentage from each booking I receive, so it varies in dollar amount. And that's the nature of small business. And it could be, so as, I don't know how big you are, but if it's immaterial, I wouldn't panic. Like if you're, if the job was $100 and you took $50 of it, I wouldn't panic. But as you're starting to get into a space where it's significant, you're really going to have to start to think about how you can not take that money right away and run it through a payroll. You also can run off-cycle payrolls. So you don't have to think about payroll as running every week or every 2 weeks. If you just need to run an off-cycle payroll and give yourself 50% of what the job was, you can do that. You can do that in any one of the software I just named. Off-cycle payroll is very common. So don't feel bound that it has to be some like cadence. Every week you have to pay yourself $500 or whatever. If you did a massive job and you got, whatever, you can run that off-cycle payroll for that job, and the state and the federal government get their tax payment. You're covered. You don't need to worry about it. You can have the money deposited into your personal bank account, and then you move on.
I was just going to add, most of these software tools and whatnot are write-offs themselves, correct? Because they are
Absolutely
for business. So while $40 is like, not something you want to pay for, at the end of the day, it ends up being something you can.
a deduction.
Yeah.
Yep, absolutely. Assume that you can write everything. Just assume that everything you spend on the business is tax deductible. So much so that if you need to buy an outfit for a job that you need to do, that outfit is tax deductible. Like, assume that almost everything that you will do is.
I have a question.
Sure.
What software do you recommend to download the bank accounts and split the business expenses from personal expenses?
Yeah, bookkeeping software. So there are a few. There's one called Wave, 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 like I'm waving to you. Another one called Xero, which is XERO. They're all very similar and they all do almost the exact same thing. So it's just about whichever platform you like. Another one is obviously QuickBooks. Everybody knows it, Intuit product. There is some software called Bench, BENCH. Bench actually does the bookkeeping for you. They're a little more pricey, but it means you don't have to do it yourself. Yeah, those are kind of the popular ones. I feel like there was another question. So as an LLC, we shouldn't be doing an online transfer from business account to personal account as an owner's draw. Daisy, no, not every time. You can do it sometimes, but it shouldn't be 100% of the way you collect the money. So deeper to understand is on every dollar you pay yourself, right? So every time you take an owner's draw, you're just putting cash in your bank account and you're not paying any payroll tax on it. You're not paying Social Security, Medicare, all the stuff that comes when you're a W-2 earner, how they have all those deductions on your pay stub. That goes away when you pay yourself an owner's draw. And the only thing you end up paying is income tax on the actual income. And that's it, which means the IRS and the state, they don't get to collect that payroll tax portion, even though you are paying yourself as like, and also it's a really big way that people launder money. So they cut that off so that you're not assumed that you're laundering your money, right? Like, they want to make sure that you're, a legitimate business. So you can transfer you can take owner's draws. It's not unheard of. In fact, I used to tell my clients that you should at least be doing a 40-60 split. 40% of your income can be owner's draw, but 60% of it needs to be payroll. Because the likelihood that you're going to get audited is exponentially higher as you get bigger. Because remember, the IRS has visibility into your bank accounts. And so as a business is making 100,000, 200,000, 300,000, and you're just taking all of that money into your bank account, they're going to come out at you and say, what are you doing with all this money? And why are you not paying payroll tax?
And then Yalita gave a plug for QuickBooks.
Oh, yeah.
Sharing that you can also track mileage on there.
Yep.
So that's great.
Yeah, you can. Mile IQ is also another, don't be stressed.
I know.
Don't be stressed. It's
agree.
okay. Take this as information and then use it as a resource for how to build going forward. Don't worry too much about what has happened so far. There's not a whole lot we can do. And odds are it's probably immaterial. Unless you're massively successful, it's not going to hurt you. You just want to start to put the practices in place so that you don't run the risk of getting to a place where it gets excessive. For example, I know, Maria, you said that you guys do art. I know art, especially minority-owned art, is becoming very popular, like 5, 10, 12x value in what it was. I have a friend a Black artist, she made a piece. Originally, the piece was for sale for $5,000. 5 years later, the piece was valued at $300,000. So let me just tell you.
Put it out there in the universe.
I'm just saying, specifically in minority art, there is something happening, I think, I have some friends that are collectors, and there are some things that are happening in sort of the minority art community where popular or white art curators are starting to purchase minority-owned art, excessive amounts, which is driving the price up. So you very much can go from we didn't make any money to balling out of control. And so I'll
let them know that. They'll make me thrilled.
I'm just saying, one good TikTok post and you're in there. So I just think we should think about it. Don't be overwhelmed. Just think about it by way of like, what can I start to do now to make sure that I create good habits so that I get to a place where I'm benefiting the most. The thing that we do a lot about money, period, especially for minorities, I'm assuming everybody on the call is we don't traditionally come from wealth culturally. And so we don't necessarily know the practices to put in place until the wealth comes. And then by that time, it's too late. So when you put the practices in early, while you're not as fast or as big, you can already have the habits of how you should be operating, which best protects you. While it is a lot of fun to go and blow $500,000 on whatever, you don't really have $500,000 to blow. Most of that is tax money. Most of that is taxed. Then you have to think about the money it takes to run the business. And then a very small portion of that is money you can actually spend. So getting in the habit of thinking about the business's money that way will really save you a lot of time and energy and headache. So yeah, don't be nervous. It's okay. Another thing that Patty said that I thought was really important was separating your accounts. She talked about having an account for operating and then maybe an account for tax. You technically should have at least 4 different accounts once you get to the place where you're creating business accounts. You should have an operating account, a savings account, a payroll account, and a tax account. A savings account and tax account are not the same. Savings as in, let me save for a piece of equipment, save for a building, save for an office. But your tax account is separate of that. That is purely tax bills that need to come out. Your operating account is anything that it takes to operate the business. And then payroll account is how you'll support and pay the people that work alongside you. And again, you will get there and you will get there fast. That's the beauty of entrepreneurship, is like 0 to 60 in 4 seconds. It could go slow, but it also can go very fast. So being prepared is the best way.
And we're putting all those good vibes out there for every single one of you, because, we've seen how talented and hardworking you are, and all of you deserve that and more. So I think we're almost at time. We are at that 5-minute mark that you asked me to let you know.
Oh, yes.
Yeah. So just, any last tips that you want to share? Any last questions you guys want to ask before we wrap up?
I'll leave it for questions. Anybody have any last questions I want to know? No? Okay.
Sorry, I do have a question.
Yeah.
Okay, so I've have a few transactions on my business account that are like Starbucks or food.
Yes.
That just when I'm out and about, I have that card. Is
Yep.
that going to be a problem, like when I do my taxes?
No.
No,
No,
we
you
just
should
ignore
see
that.
my food bill. It's unbelievable.
Okay, I was just like, sometimes I don't I don't know if it's considered a personal
No,
transaction.
it's not.
No? Okay.
No, as long as think about it like this, you don't want to go and host a 20-person dinner at Mastro's on the company that isn't business related, but buying yourself Starbucks every day is immaterial. Especially when you're working, you're like on your way to do something or you're running errands, like grab a coffee, it doesn't even matter. But just try to be conservative if you need to do something that is large dollar amount. So if you're not hosting a company dinner, if you're not trying to woo a client, if you're not, taking a potential employee out to dinner, then you probably should refrain. But also think like if you're going to go to a conference that's related to your industry and you spend a week in Miami at a conference, everything you eat, drink, and do while you're at that conference is deductible because the conference is work related.
Okay,
Yes.
cool.
So
Thank you.
yeah, don't buy all the coffee you need.
Would that be like an operating expense then?
There's actually, and there's also a category in your bookkeeping for meals. Yeah.
Okay.
Yeah. So there's a quick question about deadlines and reminders. Shameless plug, but ComplYant.co, and the link I dropped you all a bit earlier is our resource hub, but that's actually our main page where you can sign up. We have a free tier. You can sign up for free. You don't have to even put your credit card or anything in, and you answer some questions about your business and it will pre-populate your tax calendar for you. And so use that. And if you have questions, I have some people that I work with that can help you. Yeah, I think that might do it. I just want to give you guys a little bit of an encouragement before I go. I know exactly what it feels like to be right where you are. Once upon a time, ComplYant had nothing, not an employee, not a dollar. I had nothing but stress. I had like, I don't know how I'm going to do this. I was 60 grand in the hole trying to figure out how I could get a developer to build out my little dumb idea. And in 3 years, I have 50 employees. We make over $4 million in annual revenue. I have 12 million invested. Like, your business can and will be great. Don't short sell yourself. You are talented, you are brilliant, you are creative, and it's hard. It's so hard. But everything's hard. You're just choosing your hard. And choosing the hard that is for you is the best hard to choose because it's yours. You can do this. You can do this. Keep going. Don't quit. Don't get overwhelmed. Take a step back. Take a break. Look in your community. Ask around you. People, if you're struggling, some odds are somebody else you know is too. Lean on the people next to you and keep going. Oh, my IG. It's just my first and last name. It's public. That's my Twitter. That's my everything. I try to keep it easy.
Well, thank you for ending on that amazing note. I mean, we all need that, right? We all need that encouragement, and to see you successful is just phenomenal. We're going to be cheering for you and rooting for you for the next 50 employees and next, round of funding and everything else.
Thanks.
So Shiloh Johnson is her name. Well, I'll follow up with an email with all the links that she shared. And I think, she's on IG, but I think on Twitter, you guys, I mean, sorry, definitely on Twitter, but I was going to say on TikTok, you guys have gotten really creative, which is really inspiring and fun too. So check her out on all the platforms. And I heard that I could buy myself Starbucks every day. I don't know if you guys heard that. That's what I heard. So,
buy it.
We work hard. We deserve it.
Yeah.
Thank you so much. We really appreciate your time. Any follow-up questions too, let me know. I can just try to see if we can get anything else, but go to that workshop. I'll be there for sure. So
yeah, awesome. Thank you all. Have a great night.
Thank you. Thank you, Destiny.
You're welcome. Take care, everybody. Thank you.
Bye.
Good night.